Alrighty, good afternoon, traders. It's September 7th, 2023. We did a bunch of recordings today, but I want to jump in today, and good question came up in our Discord channel. I really want to address this and put it out there. So the question was, looking over my portfolio, and I talk about pruning employees. So one of the things that I've done is I come into many companies and I'll clean them up. And a lot of times it's process related, and sometimes it's employee related, sometimes it's both. And typically what you're looking to do when you're a performance improvement expert is you're getting rid of poorly performing assets and trying to replace them with better performing assets, whether that's people or technology or trades in your portfolio. It's all the same theory. You always want to have, in my opinion, the best assets performing for you that you possibly can. Sometimes you're going to get rid of assets that are doing okay, but they could be doing better. So you have A, B, and C employees or assets, if you call them. Your A's, top performers, those guys are creating sales, they're doing things properly. They're your 90 percenters, they're doing fantastic. Those are your trades that, great theta, great return on capital. They're your core trades that are working fine. Your B's are just those people they're just doing okay. They show up every day. They're average employees. They're never going to be great, but they're not really hurting you. And then you have your C people and your C trades. And those are people that are just not performing well. And in trading, as it would be in business, you got to prune assets that are just not performing well. And many times in companies, what we see is they really don't get rid of assets that they need to because they get attached to them, especially people. Oh, that guy's been with me for a long time. I hate to get rid of him now. Maybe he could become something someday. Well, he hasn't become anything in 10 years. And they're just not producing. They're your lowest 20% producers. They got to go. Same thing is with your trades. What trades are not performing? Hopefully you don't get attached to them. I really don't get emotionally attached to any trades for the most part, but there's trades you just think, oh, maybe they're going to turn around. And one of my trading rules was hope is not a trading strategy. And this really goes to that. You can hope they're going to turn around, and maybe they will, but what's the odds? They haven't performed yet. Should they continue to be in your account? Let's take a look. And I'm going to go through my actual account here. What I'm going to do is we're going to look at some of the performing assets, see where they are, and see if it's something we want to get rid of. And when I look at my account, my BP usage is exactly where I want it to be. So the first thing I do when evaluating underperforming trades is, what's my overall delta and theta for this account? Well, my overall delta is 446, as you can see in this account. Now, 446 is about a 0.15 of my percent of my portfolio, which is around 297,000 for this account. All right, so this account, 297,000, 0.15 theta, that's within my plus or minus 0.2, so my theta is not bad. If you think the market's going to be heading down, which it might, then I really don't want to have too much positive theta, but I don't think 0.2 is too much. I would love to see it lower. If a trade happens to lower it in the meantime, beautiful. Theta, my theta here is, well, 797 now, which is about 0.27%. I like to be, 0.4 is where I want to be. 0.3 is kind of my minimum in a low vol environment like this. So my theta is a little light. I want to get my theta up. I want to get assets that are working for me, and as opposed to assets that are not. So let's take a look in this account. And I'm really looking for, where am I struggling with theta? Because right now I want to add some theta to my account. Now, when I look at these, a couple of these trades are hedges and just put debit spreads. I'm not really worrying about those. What I'm worrying about is trades that are supposed to be generating theta and income, not trades that are hedges or put debit spreads that are remaining from 112s. Their only job is, some hedging protection, and I'm paying for that particular protection. So I'm not really evaluating them, but let's take a look at, where do you have some low looking theta here? So this particular trade, this is a 112 on oil, and its theta is 13. It's not the best theta, but it's not using a ton of buying power. And this put debit, this naked put on it is at 84% premium capture. It's doing pretty doggone good. I will probably leave this trade alone. When we get to 95%, I'm going to prune that off anyway. I might as well let it go. It's already there. We're up $500 on this account. I'm going to leave that. So we'll scroll down here, 50, 300, 43, 41, 52, really nothing to do. My portfolio is really well put together right now. I like where it is. My BP is 70%, of which 20% of that is in the T-bills. So you subtract that 20%, and really my trades are at 50% BP, which is where I want them to be. All right, but let's look at the low performers, and we got a couple here. So we have Apple, which is a leap put that we put on. This Apple leap put has been on for 45 days, and it's not doing squat. Okay, this is an employee that's been around. 45 days for me is a long time. I'd only trade typically 90 to 120 days. So this employee, if you're kind of looking cat years or my trade years as 120 days out being the maximum time that I get into a trade, I'm usually out of them in half of that time or less. It's been around for 45 days and it's doing nothing. So the first thing I want to do is, number one, I want to look at where is my, is my delta out of whack? No. So I'm not looking to change anything on delta. Is my theta out of whack? It's a little light. So I got to change theta. So what's using the most BP, but it's also not performing well? So let's look at this trade. So Leap on Apple right now, it's down 57%. So or 55%. It's an underperforming asset right now. 45 days in the trade, it's down $364. It's not a big deal in the scope of this account, but it's not performing. And if you look over here, it's giving me 20 positive deltas and only 4 theta. Well, that's not a lot. When I could be putting on a strangle, that would give me somewhere in the neighborhood of 45 theta, and probably even less delta on a strangle, which is closer to delta neutral. Okay, so Apple probably not performing well. I can leave it on. Oh, but you're going to close a losing trade. I don't really care if I close a losing trade. I only look at the overall portfolio. Is that, am I growing it? What's the best thing for the portfolio? For me, running a business here, that Apple employee's got to go. He's just not pulling his weight. Okay, so Apple's one. Then let's take a look at Enphase, which is another one's down 50%. It's been around for 38 days, which is getting a little long in the tooth. In relatively speaking, 30 days in a trade is not a whole lot of time. But for me, hey, almost 40 days in a trade and you're losing, and you're only giving me 3 theta, and you're giving me positive 9 deltas. I could use some less delta and I could use more theta. Enphase might need to go. Okay. Then this Neo trade is a butterfly trade. It's only down a little bit, and it's a full loser type of trade. So I put it on expecting to lose the entire amount, which is like $100. So I'm really not too worried about Neo. Nothing I can do with Neo. All right, and then SPY, we got 3 leaps here. 2 of these leaps are positive, 55% on one, almost 2% on another, and another one's down about 5%. Love when Tasty Trade just goes black. Okay, so these aren't performing well, even though it's a strategy of mine that I love, and I really am fine holding these, but 52 days, 45 days, and 38 days. I mean, since we put these on, the market has not performed well. We put them on, we top ticked it. That's why we're in Mr. Top Tick here, because I top ticked the wrong end of this trade. So I can hold on. Most likely SPY is coming back. I don't think we're heading down to the 370, 375, 365 range, but I'm only getting 3 pieces of, 3 positive theta out of these trades, and they're giving me as a combined, so which is 9 and 41 positive deltas. I can do a lot better by bringing in a new shiny strangle on a couple different underlyings that would take the same buying power. And buying power wise, I have $13,000 in buying power being used on these SPY leaps. 2,000 on Enphase, and 4,000 on Apple. So by closing these out, I'm going to free up somewhere in the neighborhood of $19,000 worth of buying power, which is going to give me more than enough to put on 2 good strangles, which should give me at least another 100 delta. So let's see how we would adjust this account. So the first thing we're going to do here is, hey, we're going to talk to this employee and tell him, you know what, you're just not doing well. You need to go. Okay, fired. Okay, Apple gone. We'll see what happens. There, Enphase, you know what? You're just not doing your job. You need to go. Okay. All right, so 2 gone, 3 to go. Now, we will, let's take a quick look at the capital requirement piece here. All right, so our BP is down a little bit here. Theta's dropped only a fraction, and our delta has dropped already. So our delta's already dropped to 407 from about 448, and our theta has dropped from 805 to 785. So our theta has barely dropped, and our delta has dropped a bit, quite a bit. Okay, so much lower delta. This SPY, we're going to make a little bit of money on these two, and then this employee been around for 38 days and hasn't done a doggone thing. So he's in his 90-day period, and we go and fire him. All right, so this, let's see if we can get a better price on this. We'll see what happens. Might have to adjust, but we're going to get rid of these SPYs. We might have to make some adjustment. Oh, we got rid of one decently, and let's look to see if we can get rid of another one while one is still working. Yep, got rid of 2, so 2 people gone. And this last SPY holdout here, let's see, why is he giving me some static here? 682. Yeah, gone. All right, so all 3 of those SPYs are gone. So portfolio's cleaned up. I got to always readjust here because this thing never keeps up. All right, BP usage has dropped a bit now. Now we're down to 195. So we've cleaned up $15,000-$16,000 of BP use already just by doing this. So look at our delta down to 368 from 448. So we've dropped delta substantially by doing this. Theta has only dropped about 30 points, and our BP has dropped now over $15,000 in BP. And I was estimating that we would clean up somewhere in the neighborhood of, I don't know, what, 17,000. So pretty close. We're in good shape. What can we put on? All right, let's take a look at maybe what we can add. What I really want to add, and I can't due to timing of the day, is I want to put on a strangle in lean hogs. This would be something I would look at. I'm going out about 90 days. I like the 7 delta short put, and I like the 6 delta long call, somewhere in that range. And I would my max loss on these can be a 2x, or I'm sorry, yeah, well, 2x is your max loss, but 2x of roughly 2,300. I mean, at a roughly $300,000 account, I can lose $6,000. So my initial profit, knowing I have a 2x loss, I usually try to stay around $2,500. So a 2x loss would be about 5,000, gives me some wiggle room, puts me just under that 2% max loss. All right, so I could put this trade on now. It'd be 8 contracts. It's going to cost me $5,700, and it's going to generate $2,300 in income. Very neutral delta and some decent positive theta. Now, I think we can put it on now anyway because the markets are closed, because livestock futures only trade till 1:30. However, I will put this trade on tomorrow, but I wanted to give you a sense of what that trade looks like. So lean hogs going on tomorrow, but I've only got 2 strangles here in ES, I wouldn't mind getting another strangle on at this point in time. So I'm going to go out, and we've already got one on at this 84-day, but I'm going to look at this 98-day, close to my 90. I'm going to go out around 7 delta-ish. We'll pick 3,800. And then we're going to go to about 6 delta on the upside-ish or so. I'm going to pick this 5 delta, 49.50. I don't know why I'm using out of the money. I would prefer open interest, but you can see there's some decent interest up here, pretty liquid. 2,200. Let's go with 2 contracts of these, because that's what my max would allow me to put on if I was making this trade. So I can put on 2 contracts, 2,200. My max loss is 4,400. Only going to use about 6,700 in buying power. Remember, I just freed up 15,000. I'm going to put 2 strangles on and using that same up. But let's put this trade on and see if we can get a fill. Oops, we gotta go down here, and all right, we're close. We might have to fuss with it. And just because I don't want to wait, because you guys are all on here, let's just do this. It's not, I would wait normally a little longer, but I want to put this trade on. All right, so we got this trade on. Boom. Let's group it. And this is a December 15 strangle. We just grouped that. December 15 strangle down here. I'm also going to put an order to close automatically at 50%, so I don't have to really pay a lot of attention. But let's look at what happened with this strangle here. So here's this December 15 strangle. Let's take a look. It's giving me about 24 positive deltas. It's a little more than I would like, but it's still really a pretty delta neutral trade. It's just the skew that's getting you a bit. And it's going to give me 47 positive theta, right? So I got rid of 5 trades. Okay, those 5 trades were only giving me 15 theta. Now I just closed those and added 47, almost 48. So I've picked up 30 long theta on this, and now my theta is up to 830. Let's keep fussing around here. The buying power is still under what it was when I started this session with you guys. So we were at 210. Now we're up to 201. But look at my delta. My delta is 394 from 448. So after I got rid of those trades and added this on, my delta is lower, which I love. And my theta is higher. It's now 824. It was 805. So I've added almost 20 to 30 extra theta to my account. So now my theta is closer to where I want it to be. I could use a little bit more, and I would really do that lean hog trade. I just can't do it with the market closed in those futures right now for livestock, but I will put that on in the morning. So there's how I adjusted my portfolio. I hope this helps and gives you a sense of how I prune losing trades, underperforming employees or assets, how they have to go get replaced by new employees or assets that can produce more for you. And I'm always evaluating my overall portfolio to make sure that if it's in there, it's producing. And if it's not, it's got to go. You run it like a business, because trading is a business. This is not a hobby. Okay? And if I was running my own company, which I have several companies, I am not going to stand for underperforming employees or assets. If they don't perform, they got to go. And as simple as that. It's a business, and you're here to make some money. I hope this was helpful. If you like this video, go ahead and click that like button, subscribe to this channel, join us in our Discord at Income Navigator. We're having a ball, and you can see more information in the details here. Take care, everybody, and have a great rest of your day. See ya.